I'm Ryan Iverson, and this is the Investor Breakout Weekly Insight. Let's talk about what happened this week. Canada avoided a snap election last night after Prime Minister Mark Carney's government barely survived its first major confidence test. The 2025 federal budget passed 170 to 168, a razor-thin margin that came down to a few absentees and a last-minute climate concession from the PM. The budget unlocks more than $140 billion in new spending over 5 years, focused on big-ticket infrastructure and investment attraction. Supporters call it a growth plan. Critics, however, including the Conservatives and Bloc Party, point to the $78 billion deficit and say it's reckless. Who was the key swing vote? Green MP Elizabeth May. She flipped to yes after Carney publicly recommitted to Canada's Paris climate targets. But she warned the Liberals shouldn't expect her support again unless they deliver real progress. The minority government still faces several confidence votes on upcoming spending bills. But for now, Carney's first budget lives to fight another day. Bitcoin fell below $90,000 for the first time in 7 months. Bitcoin has now lost all its gains for 2025 and is down roughly 27% from its early October peak above $126,000. This correction mirrors previous pullbacks over the past year and a half. Ethereum has also slumped, losing 40% since its August highs. Approximately $1.2 trillion has been wiped from the total crypto market in the last 6 weeks. ETF outflows continue. Retail buyers remain hesitant after October's $19 billion liquidation event. And crypto-linked stocks are sliding. Standard Chartered warns that a drop could leave half of public crypto treasury companies underwater. Still, adoption continues. Institutions such as the Czech National Bank and Luxembourg's Sovereign Wealth Fund are adding crypto. And Strategy added over 8,000 Bitcoin. Do you see Bitcoin's drop as a buying opportunity or a warning sign? Let us know in the comments. Canada's oil sands are back in the spotlight. After years in the shadow of US shale, output is climbing and producers are seeing their shares soar. The catalyst? The newly expanded Trans-Canada Oil Pipeline. It's now bringing Canadian crude to critical Asian markets, lifting local heavy oil prices from discounts of more than $30 per barrel to just $10 to $12. Production hit a record in June and could rise another 300,000 to 400,000 barrels a day, reaching 6 million barrels daily by 2030. Stocks of Imperial Oil, Suncor, Cenovus, and Meg Energy have outpaced the S&P Global Oil Index by as much as threefold over the past year. US institutional investors now hold as much as 65% of oil sand companies, up 25% from a decade ago. With US shale peaking, Canada's steady, low-cost oil supply is catching global and investor attention. Do you think Canada's oil sands can keep this momentum going? Politics, Bitcoin, and oil are all making waves today. Subscribe to hear the insights beyond the headlines. I'm Ryan Iverson, and we'll see you next week.